This is your LMAX exchange technical update for Wednesday, August 30th, 2017. Euro dollar. So the euro continued to extend its impressive run in 2017, again pushing up to plus 2.5-year highs, now through 120, that critical psychological barrier, and the market inching closer towards a measured move upside extension at 121.50. We did see the market pull back after putting in a high around 120.70 on Tuesday, and this could set the stage for that meaningful reversal we're looking for. But right now, the market would need to start to close back up below 119 at a minimum to suggest that that possibility can show follow through. Until then, despite this latest pullback, the pressure does remain on the top side, and the market could be looking to put in a minor higher low as it continues up towards that 121.50 extension. As a reminder, the market had consolidated roughly in a 245 point range between 119.10 and 116.65, and so that range broken projected that move up towards the 121.50 area. Sterling dollar. So cable did a good job of bouncing out from some critical previous resistance turn support at 127.75 a few days back, but the market is finding some solid resistance into the rally up towards the 130 area. Ultimately, as we've highlighted, the market is in a possible consolidation now, a choppy consolidation that could carry on for a good deal going forward, although overall, eventually, when the market does break, we suspect that the move will be to the top side, with the market easily clearing 132.70 and moving up towards the 135 to 140 area. Again, the breakout above 127.75, which had been a range high off of the plus 30-year low from October of 2016, suggested that a meaningful base was in place and suggested that we could be seeing a longer-term structural shift. But still, on a shorter-term basis, a lot of chop may be expected before the market eventually pushes higher. Any setbacks should continue to be very well supported, ideally in the 127s, though we could see a drop down into the 126s without it really compromising anything, and only a drop back below 125.90, the low going back to the 21st of June, would really compromise or delay the constructive outlook. It wouldn't negate it, but it would delay it. Dollar yen. So some extremely bullish price action in dollar yen on Tuesday, with the market trading just shy of that 2017 low at 108.13 before sharply reversing course back above 109. The reversal and bullish outside day potential formation, or the bullish formation, does potentially set the stage now for a resumption of this range that we've been talking about, and an push up towards the highs, the range highs back above 114. Of course, we would need to see a break above 111 to really strengthen that outlook, and until then, the market could just as easily stall out. But it's certainly looking, after the market had been basing out around and ahead of that 2017 low in recent sessions and was unable to do so, breaking down to fresh multi-session lows on Tuesday, it could be poised for an acceleration back to the top side in adherence of this range trade. So keep an eye on 111 above for confirmation, but a bullish close on Tuesday does potentially warn of fresh upside ahead. Euro Swiss. Euro Swiss hasn't been doing much of late. The market has been chopping around up and down. Eventually, the market is expected now to break higher above the recent highs at 115.40. Remember, this is the highest level that the market had gotten to since January of 2015, that memorable collapse in Euro Swiss, and it's expected now that it should trade up above this level and towards that previously supported level, the S&B supported level at 120 over the coming weeks. At the same time, any setbacks here should be very well supported into the 112 area, which was a major resistance zone that we broke out of, which has now forced a shift, a bullish shift in this structure. Aussie dollar. So Aussie has been showing signs of stalling out ahead of 80, and if the market does stall out and is unable to establish back above 80, we could see a reversal here in a lower top below the 2017 plus 2-year high at 80.66. On a break back below, we confirm that lower top on a break back below the recent lows at 78.08, and that would of course open the door for a measured move downside extension, which could take us down to the 76s. And at this point, again, only a close back above 80 would give reason for pause and suggest that the market is looking to retest those recent 2017 highs. Dollar CAD. So dollar CAD had been coming back down after trading to a 2017 low at 24.14, a plus 2-year low, and then recovering up towards 128. The market had come back down, looking like it may want to retest that level and potentially break lower. But as we highlighted in our analysis, we didn't expect that the market would look to establish much below 124.14. It still could, but we were looking for the formation of a higher low or a double bottom type scenario in anticipation of a resumption of this correction, which still has legs to carry through up towards the 129 to 130 area. We've highlighted this 38.2 fib retracement off of the 2017 high-low move, which comes in at 129.40. Kiwi dollar. So the New Zealand dollar has been chopping around after the market has broken down, pulling back from that 2017 high, that plus 2-year high at 75.58. This is a market that's been very well capped on rallies in recent years up into this area here, and we could see a resumption of declines, more aggressive declines, if the market establishes below 72. That takes the market all the way back down towards the 2017 low, which comes in the 68s. So right now it's going to be interesting to watch 72 below, and on above you want to pay attention to resistance around 73.40. SPX 500. The S&P 500 has been showing signs of potentially stalling out since putting in that record high that was seen earlier in the month of August, just shy of 2,500. We've seen lower tops and lower lows, but the market is still focused on the top side, with the market holding above 2,400. This is a critical support level, and if it's taken out, it will suggest that we're seeing a more meaningful bearish structural shift. But until then, the pressure does remain on the top side, and this market could very well head back up to those record highs and to fresh record highs. So while there are signs of this move being exhausted, which is certainly not a surprise following this intense trend over the past several years, the market would need to establish below 2,400 to set the stage for such a bearish reversal. Gold. So gold has extended its gains in 2017, taking out some key resistance around the 1300 area, and with the break now putting the focus on a retest of 1375. This is a level that we've been talking about for several months now, as we've been looking for this market to be trading with a constructive tone, and we've been calling for dips to be very well supported. And so this latest breakout does expose a retest of that 1375 level, and any setbacks that we do see now should, as we've been highlighting, be very well supported, ideally ahead of 1240. It is worth noting that gold can see some choppy, extreme up and down moves, and so setbacks can be seen and they can be severe, but now ideally setbacks should be supported into the 1240 area or ahead of 1240 in favor of continued upside towards a retest of that 2016 high. But only back below 1200 would really compromise the constructive outlook for gold.